Alright, so now we will be starting our paper, that is F2 Management Accounting. So we guys have already done the MA1 and MA2, so it will be the continuation of the same course and the same context, that is the Management Accounting. Most of the topics that we have done in MA1 and MA2 will be considered over here again, and they will be they will be having little bit of advancement, but more or less the topics will be the same. And we will be looking at the course detail over here as well, and the syllabus guide. Then you'll realize that most of the topics that we have in F2 are the carried forward topics from MA1 and MA2. So first of all, I will be telling you a bit about this paper. Basically, this paper, as we know that for management accounting, there are three purposes, that is the planning, controlling and decision making, right? Three purposes are there: planning, controlling and decision making. So over here in this paper, all we have to do is to gather the information and provide to the management so that they are able to take the proper decision. That is basically the aim of this paper. So over here what we are doing, we are gathering the information about the cost, we are gathering the information internal to the organization, and then providing it to the management so that they can take proper decisions on that, right? So that is what we have in this paper, that it will totally be based on the decision making processes. 5 areas are there of this syllabus, okay? 5 areas, that is the nature, source and the purpose of management information. So that will be the introductory part, in which we will be talking about the basic areas like what is management accounting, what is cost accounting, what are the difference between management and financial accounting, all of these things. Then explain and apply cost accounting techniques. So cost accounting techniques are basically the accounting for material, labor, overheads and the product cost, in which we have the variances. Budgeting, that is the part C of your syllabus, and budgeting would be new to you because you have not done budgeting before in MA1 and MA2. Syllabus area D, that is the compare actual cost with the standard cost and analyze variances. So one complete area is based on variances, right? And the variances that we have done in MA1 and MA2, it will be more advanced than them, because in these courses MA1 and MA2 the scope was limited. Now over here the variances that we are going to do, they will be much more in detail and in depth, right? So you cannot expect that the variance will remain the same. Obviously the base will continue from there, but the depth of the course will be different. Then we have explain and apply performance measurement and monitor business performance. This is very important area, again a new area to you, with some things carried forward from the previous courses. Over here, performance measurement, if you guys remember, in our MA1 and MA2 we did the performance measurement based on the different centers like cost center, profit center and investment center, and we had different ratios to analyze their performances. So similar kind of ratios we will be having over here as well, and definitely those ratios which we have done will be there as well, and some of the new ratios will also be there. Okay, so this course is a lengthy course, and you can say more or less of the same length of MA2 and bit more than that. But if you have the knowledge retained in your mind, which we did in MA2, so it will make your life very easy in this course. Okay, all right. Now as I was explaining to you that in our previous courses I had this hierarchy over here as well, and that is you start from MA1, that's done, you start with MA2, that's also done. Now we are standing at this stage, that is your fundamentals of management accounting, also known as the F2. The knowledge guys that you will be getting over here, that will be making up almost 40 to 50% that you will be carrying forward to the F5. And F5 is one of the toughest paper of the fundamentals level. So whatever we study over here, just make sure that you take proper knowledge over here, you get the concepts over here, and you just don't memorize the thing and pass the paper, because you can pass the paper by just memorizing the things as well. But the point over here is that you should be able to get the concepts of the thing. Like for example, we did variances. We did variances with the concept, we did variances with the formulas. But you guys find it easy to do with the logic, with the concept. So concept, when you understand the concept, it makes very easy for you to do the things and to attempt the things. So it's better to understand the concept, because concepts can be retained and they can be carried forward. And when you will be going to the paper F5, because now when I discuss about the course with you, when I discuss about the contents of the course with you, you realize that most of the topics which are over here in F2 we have already covered in MA2. But there will be some advancements, definitely, but the topic is not new to you. Is the topic of variances new to you? No. Is the topic of accounting for material, labor or overheads is new to you? No. Definitely there will be some advancements. For example, in your overheads, the apportionment, we will be having something new which is known as the reciprocal method or the redistribution method, which we have not touched in detail in MA2, but over here that will be in detail. So some advancements are there, but you cannot say the topic is completely new to you. Few topics are new, like budgeting, they are new to you. So the knowledge that we are going to get over here is like almost 40 to 50% of F5, and then the same knowledge will be carried forward into your optional paper of P5 and the essential paper of P3, like things like balance scorecard and all of those things, the theoretical aspects that will be carried forward. Okay. Now exam format, basically 2 sections it will be having. Previously we used to have the same pattern that we used to have in MA1 and MA2, that is the 50 questions, 2 marks each, but now the pattern has been changed and we will be having 35 questions of 2 marks, the normal kind of questions that we used to have previously. Okay, so it will be including your boxes, it will be including your multiple choice questions, all of those things that will be included in the first section, that is of 35 questions. Okay, so that will be consisting of 70 marks of your whole paper. The rest of the 30 marks, it will be based on 3 questions, 10 marks each, and each of these sections, each of these questions has been designated the sections as well, that from which area these questions will be coming. So you don't have to guess that from where my question will be coming. You already know that the last 3 questions, you know from where it will be coming. It will be coming, first question from budgeting, second from standard costing, that is your variances, and the third is the performance measurement, that is related to your ratio analysis. Okay, so 3 things are compulsory. Budgeting will be coming in your exam, standard costing will be coming in your exam, and performance measurement will be coming in your exam. Now you can expect these 3 areas to be very important. The reason being, because you know 10% is compulsory, 10 marks each is compulsory, and then in your 35 questions, again some of the questions will be coming from budgeting, standard costing and the performance measurement. So you can expect that almost 30 to 40% of your paper will be based on these areas, these 3 areas. So we have to make sure that when we will be doing these areas, we have to make sure that we do it properly, so that at least if you do these 3 areas only, you can easily get like 30 to 40% of your course is already done. So these 3 areas will be very important to your course, and you have to pay complete attention on these ones. Alright. Now the chapter number 1 that we will be discussing today, that is the nature and the purpose of the cost and the management accounting. Nothing will be new to you guys over here. It's just an introduction to the management accounting, because that's the start of the course. So we will be discussing it all over again. So all the things that we will be discussing today in this chapter will be completely familiar to you, what you have done before. And in this chapter today, basically we will be discussing what is cost accounting, what is management accounting, what are the difference between the cost and the financial accounting, why do we do cost accounting, how do we differentiate between the different areas of the organization. All of those such things we will be discussing today. So we'll start off with this chapter. The first thing, data and information. So instead of me again saying all those things all over again, I want these things to be like more interactive, and I want to be more interactive with you guys rather than just telling me, because I know you have this information. So basically you know that data is something which is raw. Okay, data is something which is raw, you have not processed it, and it is a raw facts and figures of the information. And information is something which has been processed in the meaningful form to make it usable or to make it meaningful to the user. Now, can you give any example of that? Like for example, if you are in an organization, okay, you're working in a cost accounting department, which things will be data to you? Let's suppose, more specified, you are working in a payroll department, right? You're working in a payroll department and you're calculating the salary of any employee, let's say employee A. So if you're calculating the salary of employee A, what thing will be data to you? Okay, now when we are recording, when we are calculating the salary, for calculating the salary, what two things do we need? The number of hours and the rate. Okay, we need two things, the number of hours that has been worked by the employee and the rate. So rate will be pre-decided. When you will be hiring the employee, you will be deciding that rate in your agreement. But when we talk about the number of hours, where will you get the number of hours from? If you just recall your knowledge of labor, where do we get the number of hours from? From the timesheets. Okay, we get the number of hours from the timesheets. So the number of hours recorded in the timesheets, that will be data to you. Okay, if you are working in a labor department, you are calculating the pay for your employees. So the timesheets, the number of hours that you will be getting from the timesheets will be your data. And when it will be processed and the salary will be calculated, and you will be saying that, okay, this was the actual number of hours worked, this was the idle time, this was the overtime, and the rate for each of the different areas is A, B and C. You multiply the respective hours by their respective rates and calculate one final amount of the salary. So that will be what? That will be an information to you. So when you process something, that is an information. And when you just get the things in the first time, that is a data when you have not processed. Remember, I gave you the example that if I calculate the height of every single person in this city, so what will that be? The survey that I conducted, according to that, that whole bunch of forms, for that will be data to me. But when then I analyze it and then I process it and calculate it, okay, the average height of a man in this city is, let's say, 5 foot 7 inch. So the average height is 5 foot 7 inch. How did I calculate the average? By analyzing the maximum and the minimums and the everything present in the population. So that is known as your information. So you get the data first time, you haven't processed it, it will be known as your data, because that is raw facts and figures. And if you process it and turn it into a meaningful form, that will be considered as your information. Okay, cost accounting system records data about the cost of operations and the activities within the entity. Now when we talk about the cost accounting, basically cost accounting system is that, what is cost accounting related to? What do we do in the cost accounting? We calculate the cost. Okay, so cost accounting is basically the accumulation of the cost of either a product, either a service, either a department or company as a whole. For whatever purpose, if we are calculating the cost, if we are accumulating the cost, for whatever purpose it is, if we are accumulating the cost and gathering the cost, that will be known as cost accounting. So in a cost accounting system, what are the sources of data? It can be anything. For example, we have over here invoices, receipts, timesheets, right? Anything can be source of data in order to gather the cost. Like for example, invoices for material, receipts for material, timesheets for labor, and then you can have the bills for the overheads. So different things are there, different things. And on the sources of data, we are having a complete chapter that will be, in that we will be having a detailed discussion on what are the different sources of data and what are the different types of data that we have. Okay. Now, you guys already know this thing. Who are the management? When we talk about the management, who are the management? The management are the people who are running the business. Okay, management are the people who are operating the business or running the business. So what will be management information? What will be a management information? The information which has been given to the people who are running the business. Why do they need information? Why do the management or the people who are running the business, they need information? Why do they need it? What's the purpose of having the information? Like if you are the management of this company. So can you work without having any information? In order to operate, you need to have some information. That, let's say you have a business, right? You have a business of a manufacturing company. You need to have the information that what is the price of materials, what is the cost of labor, what is the cost of the overheads. You need to have this information, right? You need to have this information. So when it comes to the management can only run the business when they have a proper information. So management are the people who are running the business, and management information is the information which is provided to the management. So what is management accounting? What is management accounting? Management accounting is the process, okay? Management accounting is the process of providing the management with management information. And why do we need to do that? So that they can take proper decisions, okay? So that they can take informed decision. Guys, there is a difference between informed decisions and correct decisions. What is the difference between informed and correct decisions? For example, you provided the information to the management, okay? You provided the information to the management. So can you make sure that the decision that they are taking is 100% correct? No. Even with having the information, sometimes the decision that they are taking might be incorrect, might be wrong. So the decision that they are taking is a informed decision, not a correct decision. Correct decision is when the in front of you, right? Then you can decide that whether the decision that you have taken was correct or wrong. But the purpose of providing that information is not so that they can take the correct decisions, but to take the informed decision, so that they are already informed. They cannot complain that we were not informed. They were informed already, and then they took the decisions, okay? So they keep a clear difference of that, okay? And management information, how do we prepare? There are three purposes of preparing the management information. First one is the routine reports. On daily basis you are producing some reports. Any example can you give to me of daily reports or the routine reports? For example, on daily basis you are producing some production report, that on daily basis how many units you are producing, okay? How much stock do you have? So these kind of information can be considered as a daily report. How much is the stock coming in, how much of the stock is going out, what raw material you have, what raw material is going out. So all of these reports will be considered as a routine reports. Especially prepared reports, sometimes some special circumstances are there. For example, a flood comes in, right? A flood comes in and all of your inventory has been destroyed. So based on that you will be preparing a report that how much inventory has been destroyed, how much inventory is in good condition. So will the flood be coming on daily basis? No, that is one-off event, okay? That is one-off event. Or when you are buying, or let's say you are buying a non-current asset, okay? You are buying a fixed asset. So will you be buying the fixed assets on daily basis? No, that will be like once in a year or twice in a year. So that is one-off reports. And answer to one-off inquiries. Some of the inquiries are only one-off, not on daily basis. Like for example, if you talk about, let's say, a call center. A call center will be getting inquiries on daily basis. Some of the inquiries are very common, right? But some of the inquiries are very one-off. Okay, you cannot expect the same kind of inquiries again and again, because the rare cases are there that some ad hoc kind of an inquiry appears. So three different types of reports we prepare: the daily reports or the routine reports, then we have specially prepared reports for special circumstances, and the one-off inquiries, answer to them, okay? Answer to the one-off inquiries. Okay, you guys are already familiar with this thing, that is the qualities of good information. So you know already that the mnemonic accurate we use over here in order to see the qualities of good management information. So for A, accurate. Now obviously I won't explain this to you because you already know. So accurate means all the time the accurate up to the last point, or sometimes rounded as well, or depends on the situation. Exactly, depends on the situations. So if you are providing an information to the top level management, they will not require information in detail, right? They will want just the overview of the information. So to them you can provide a rounded figure. But when you talk about the low level organization, low level of people in the organization, they will be needing a detailed information. So in that case you have to be accurate up to the last point. Complete. What does complete means? All the time detailed information or summarized as well? Again, it depends on the situation. But when we talk about the summarized information, does that mean we have to omit some part of it? No. When you're talking about a summarized information, it does not mean you omit some of the important part or the material part of the information, because of which the decision of the user of the information might be influenced. So you have to make sure that information that you are providing, whether detailed or summarized, you have to include everything and the complete information is provided. What is meant by cost beneficial? Cost beneficial. The analysis of cost and benefit. You do the analysis whether the cost is more or the benefit is more. When will you produce information? When the benefit will be more or the cost will be more? When definitely the benefit will be more. So over here the cost beneficial means that your benefit has to be more than your cost. Okay, then only you will be producing the information. User targeted. User targeted, or you can put it this way, who is your end user? Okay, who is your end user? Who will be using your information? So what are the three levels in the organization? Strategic level, tactical level and the operational level. Three levels are there in the organization: the top level, middle level and the low level, that is the operational level. So when you are talking to a top level management, how will you present the information? Just like a report or just orally, or you will be making a presentation? Definitely you will be making it a presentation and making a proper presentable manner in which you will be presenting the information. But when you will be talking to a low level employee or an operational guy, you might just communicate it orally as well, verbally as well. So it depends on who is your end user. Relevant, the information that you are providing has to be relevant to the person who is getting the information. Okay, the same example, the financial accountant should not have the management accounting information and management accountant should not have the financial accounting information. Authoritative, or you can say the reliable, the source from where the information is coming has to be reliable. Okay, right, the source from where the information is coming has to be reliable. The credibility of the source, the credibility of the information will be increased when it will be communicated by an independent person. Just like an auditor. An auditor tells you that this company is doing well. You believe him. You believe him. Why? The point is because the credibility of the information will be increasing, because now it is coming from a reliable source. You can trust on that information. Timely information should be provided on the correct time. Not before that, not after that. Whatever the time has been designated for the information, it should be provided on that particular time. The last one, easy to use, understandable. The manner in which you are providing the information is very important. It should not be a complicated manner, because if you complicate the things, it will become very difficult for the user who is getting the information to understand. Okay, so you have to make sure that whatever information you are providing, it is in a very easy to use and understandable manner. Okay, it is in a very understandable manner, so you don't have to struggle. You don't have to struggle that how to get the information from this data which has been provided to me. It should be very easy way, right? Remember I gave you the example of your exam paper, that if you will be doing your exam paper in a sequence, it will be very easy for the examiner to understand that okay, this is question 1, this is question 2 and this is question 3. But if you will be mixing all the different parts, then definitely it will be very difficult for the examiner to identify where the question has been starting and where the question has been ending. Okay? So accurate, complete, cost benefit, user targeted, relevant, authoritative, timely and easy to use. These are the qualities of the good management information. Purpose of management information or purpose of management accounting. Three purposes are there for management accounting, and you guys already know that is the planning, controlling, and decision making. Now, when we talk about a plan, why there is a need to plan? Why we have to do planning? Why can't we just start directly the work? Why we need to plan? Okay, so that we move in a systematic order, definitely. Now, basically, planning. Why do we need a plan is basically, as you said, that you need to move in a systematic order and you need to know where you have to go. If you don't have a plan, can you know that what is my end goal? No. So in planning, what you will be doing, you will be setting your end goal, okay, and that is known as your objective. Remember, I told you the difference between the objective and the strategy. What is the difference between an objective and a strategy? Objective is your final goal, your mission, that what you want to achieve, whereas the strategy is the plan, that how you will be achieving that. Okay? So objective, what do you want to achieve, and strategy, how will you achieve that. So when you will be planning, you will be involving these two things and you will be finalizing these two things, that okay, this is what I want to achieve and this is how I will be achieving this thing. So that will be done in the planning. When your planning will be finished, what will be your end result? It will be a formal plan. Okay, it will be a formal plan that okay, the complete plan has been formalized. Now we have to do this, and this is how we will be achieving this. So you will be, you can say that the total problem will be identified, and then a movement towards that problem will be starting. Okay. The next thing that we have is the monitoring. Now, as I told you, in an organization there are three levels. Okay, three levels of the management, and that is how the levels of planning has also been divided. That is the strategic plan, tactical plan, and the operational plan. Basically, strategic plan will be top management. Okay, top level plan. Okay, a strategic plan will be a top level plan, and it will be a long term plan. Okay, it will be a long term plan. So when we talk about a strategic plan, you can say it can be the mission statement of the company, that after 5 years we want to become the number one company in the car manufacturing industry. After 5 years we want to become the number one in the pharmaceutical industry. So this will be a strategic plan, and most of the times a strategic plan is very vague. It is not clear, because a strategic plan will be telling you, okay, we want to do this, but how to do this, and that will be broken down into a more shorter term than the strategic plan. Then they will be known as the tactical plan, and the tactical plan, guys, will be made by the departmental head. For example, production manager, purchase manager, finance manager, sales manager. Each of them will be making plans for their areas of responsibility. So finance manager will be making a finance plan, and then the sales manager will be making a sales plan, production manager will be making a production plan. But if each one of them has to do this, why do we need a strategic plan? Why do we need a strategic plan? Because if each one of them has to make their plan for their department, do we need a strategic plan? Look, when we talk about the strategic plan, a strategic plan is the final goal of the company. So when the tactical plans will be made by the middle line managers, they will be making plan in order to achieve that final goal. If you are not doing a strategic plan, you don't know your final goal. You don't know the final goal of the company. So the final goal of the company has to be established, and then you have to work towards that in order to make shorter plans. And then the further tactical plans will be broken down into the more short term and the daily or weekly plans on the day-to-day basis, that will be telling you that how to use the resources of the organization effectively and efficiently in order to make sure that you achieve those goals which are identified by the company. Like for example, you wanted to do ACCA, so your goal is, your strategic goal is to become an ACCA qualified after 3 years or 4 years. So after that, that is your strategic plan, your mission, right? You broke that down into more tactical plans, that for the first 6 months I will be taking 2 papers, then the next 6 months I will be taking 3 papers, and like this. Then on daily basis or on weekly basis you have to do some planning. Okay, I have to complete this chapter for this particular course, I have to complete this chapter for this particular course. That will be considered as your operational plans. So there are 3 levels of plans over here: strategic, tactical, and operational, right? The next stage is control. What word I told you for control? There was one word I told you for control, and that was monitoring. Okay, and that was monitoring. Control means you are monitoring your performance. Whenever you are monitoring your performance, how do you monitor? How do you monitor your performance? Can you just actually looking at your performance, you can just control it? You need a benchmark against which you will be comparing your performance. And by which thing you will be comparing your performance? Your initial plan. Okay, you will be comparing your performance with your initial plan. That I made this plan. Now am I working towards the plan correctly or not? That is what your monitoring is. So you will be monitoring. And why you will be monitoring? To keep your performance on the track according to the plan. So if any deviation is identified, what will you do? You will consider different options and take the appropriate corrective action to bring your performance in line with the plan. And these deviations are known as the variances. So variances can be favorable, can be adverse. Okay. All right. And the last one that we have is the decision making. Okay. Decision making. So decision making is basically to take an informed decision. Okay. To take an informed decision after looking at all the things, after looking at all the data and the information, take a proper decision. So it is a complete cycle. Okay, it's a complete cycle. So in decision making, what do we do? First of all, identify the goals, or you can say identify any problem that has to be rectified. For that you consider different alternative solutions, and after looking at these different solutions you gather the data for them. That okay, if I choose this option, what will happen? If I choose that option, what will happen? And then you make a choice and implement that decision. Okay, option A seems to be the best option, so choose option A and implement option A. After implementing, can you just leave it? No, you have to constantly review it to make sure that your performance is in accordance with the expected outcome. So you analyze your actual performance and compare it with the expected one. And if there is any requirement to take the corrective action to bring it to the right course, you will be taking the corrective action if necessary. So what are the 3 purposes of management accounting? Planning, control, and decision making. In planning, what 2 things we will be setting? Objective and the strategy. And what are the 3 kinds of plans we have? A strategic plan, tactical plan, and the operational plan. Then we control our performance. For control, what do we need? A benchmark for the comparison. And in the end, we just implement the decision that we have taken in order to achieve the final goal of the company. Alright guys, now the next topic that we will be discussing is responsibility centers. Now basically, if you are working in an organization, first of all, try to recall the definition of an organization. What is an organization? I told you 4 bullet points for the definition of an organization. An organization is a social arrangement. Okay, first bullet point is that organization is a social arrangement. Social means arrangement of human beings, arrangement of people working towards a collective goal. Okay, working towards a collective goal, and it assess its performance within its boundary. So 4 bullet points: social arrangement, collective goals, assess its performance, and have a boundary. So an organization cannot be, You cannot say that organization does not have any boundary. Okay, organization will be having a boundary within which it will be operating. Okay, within which it will be operating, and when it will be operating, definitely when they have formulated some budgets, when they have formulated some plans, when they have formulated some objectives, they will be working towards it in order to identify that are they getting their performance done, are they achieving their objectives or not. So an organization will be assessing its performance and operating within its own boundary. Now when we talk about the organization, every organization will be having some structure, right? Every organization will be having some hierarchy, right? And you can divide the organization in different areas in different ways that we have discussed, that you can divide the organization on the basis of function. For example, sales department, marketing department, finance department, and administration department. So you can divide the organization on the basis of function. What else you can do? You can divide the organization on the basis of geographical area. Like for example, Middle East region, Europe region, South Asian region. So different areas are there. And you can also divide your organization on the different product lines that you have. For example, the best example we can have of this is Samsung, right? Are they having only one product? No, they're working in washing machines, they're working in mobile phones, they're working in tablets, they're working in the microwaves, TV, LED TVs. So different areas we have, and on different basis we can divide our organization. Now when we are having an organization, every organization will be having a structure, right? Every organization will be having a hierarchy, and through which the chain of command will be going up and coming down. So this responsibility center, before understanding the concept of responsibility center, you need to understand that when we formulate an organization, we do not just formulate an organization just like that. There has to be a proper structure. On the top, you can say there would be the president or the chairman. Then comes the chief executive officer. On the level of the chief executive officer, you can have the chief operating officer and the chief financial officer. Then comes the managing directors. Then comes the general managers. Then comes the departmental heads, and then comes the supervisors. Okay. So when we talk about an organization, proper structure has to be there. Responsibility center is related to this theme. Okay. Responsibility center is related to this theme. Basically, what we are discussing in responsibility center is that in responsibility center, every area of the organization will be divided into area of responsibility. Okay, and that area of responsibility, that person would be held accountable for the performance of that area. Let's say for example is a factory. Okay, a factory is you can say kind of a profit center, because it gives you revenue and it incurs the cost, which in turns gives you the profit. But within a factory we can have different departments. For example, machining department, assembly department, maintenance department, stores department. Each of them can be considered as one cost center. Okay, each of them can be considered as one responsibility center. So basically, responsibility center is that we divide the organization into different areas of responsibility, and one head would be responsible, one manager would be responsible for their area of responsibility. Now for example, you can say that each one of you are working in an organization. One of you is responsible for the finance function, one of you is responsible for the sales function, one of you is responsible for the marketing, administration. So each of you would be responsible for only your area of responsibility. You will not be responsible for the performance of any other person's area. So that is called responsibility accounting. Okay, this process of being held responsible for your areas, revenues and cost is known as the responsibility accounting, and that area itself is known as the responsibility center. Okay, that area itself is known as the responsibility center. Now we can have, normally there are 3, but we include revenue center as well. So we have 4 centers. Okay, we have 4 centers, 4 kinds of responsibility center: cost center, revenue center, profit center, and the investment center. Okay, so the first one is the cost center. So you guys can recall that we have done this already. The manager of the cost center will only be responsible or only be held accountable for cost. Okay, he will only be held accountable for cost. Any example? I just give you an example that in a factory, machining department, are they selling anything? No. So that will be considered as a cost center. Okay, another example, accountancy department in an organization. So are they earning any revenue to you? No. So they will be cost center. Administration department, they will be a cost center. Then comes the revenue center. Just like the cost center is only responsible, the manager of the cost center is only responsible for the cost, the manager of the revenue center will only be responsible for the revenue. Okay, only be responsible for the revenue. So for example, in let's say in an organization we have a sales department, right? In an organization we have a sales department. Sales department cannot be considered as a revenue center because that will be incurring cost as well as earning the revenue. So that will be something else which we will be discussing next. But within the sales department, the income department, which is only getting the revenue, the income department, that can be considered as a revenue center. So it does not mean that you have to look at the whole area of the organization as one department. Within a big division, you can also have small departments, and we will be having one example as well. The next one is the profit. But guys, you know, how do we calculate the profit? That is revenue minus the cost. Okay, revenue minus the cost. So profit center will be you can say the scope of the profit center will be much more widened and broad as compared to the revenue and the cost. So now we continue with the same example. Sales department itself can be considered as a profit center because it will be incurring cost, it will be earning revenue. So the revenue minus cost will result in your profit. And the last one that we have, the investment center. When you have the profits with you, when you have the amount of cash with you, or whatever your earnings are there with you, then remaining earnings, residual earnings, what will you do with them? Will you just keep it as it is, or you will invest further in your business? You will do both. Okay, you will keep some of that for the future reasons to be used in the future, and the rest of that you will be investing either in any of the projects or within your business. Within your business, for example, you can have some more non-current assets coming to the business. So that depends on your company. But investment center will be the one which will be responsible for all the 4 things: cost, revenue, profit, as well as the capital investment. So the best example of an investment center can be a treasury department, okay, or a whole division of the organization. Okay, a whole division of the organization. For example, in Samsung, mobile phones is a whole division. So that can be considered as a investment center. Okay, because they are earning revenues, definitely they are incurring cost, so they are making profit, and then they are further investing that profit into the division. So that whole division can be considered as a investment center. Now when we talk about the performance measures of each one of them, for cost, the first and the foremost is the cost per unit. We need to have to identify the cost per unit. And how do we identify that? That is total cost divided by the total number of units. So that will be your cost per unit. And then we have different measures. For example, we have production volume ratio, we have capacity ratio, we have efficiency ratio. All of these we will be discussing later on in the section of performance measurement, because here we are not discussing them, we will be discussing them later on. For investment center, what performance measures can we have? Return on capital employed, residual income, asset turnover, return on investment, all of these. Because on investment, when you are making certain investment, with what view and with what you can say intention are you investing? Definitely you want to get some return on that. So the performance measures of investment center, the best performance measure of the investment center is the returns, and that can be return on capital employed, return on investment, residual income, asset turnover. So all of these ratios will be discussed later on in the section of the performance measurement. Okay. Now let's just look at an example over here, guys. It's related to these responsibility centers. A media company has several divisions. One is a magazine publishing division. So it's a media company which is having several divisions, and one of that is the magazine publishing division. So they can have internet division, electronic divisions, anything, right? This division is divided into 3 operating units, that is the fashion magazine, sports magazine and business magazine. Okay, within a big magazine division you have 3 operating units which operate from different offices. The fashion magazine unit has 3 main functions: commissioning, editing and printing, and marketing and sales. So 3 main functions are there within the fashion magazine. So first of all there is a whole division, then we have in a division we have 3 magazines, and then one fashion magazine is further divided into 3 main functions. So they are asking you that how can we allocate the centers within this setup. So let's just go through that. The media company might organize its cost and management system as follows. Each of the division in the media company, including the magazine division, might be an investment center. The senior manager of the magazine division might have the authority to incur the capital expenditure to acquire new assets for the division. The performance of the magazine division might be measured by its annual return on investment. So what basically they are saying over here, we have a company in front of us, right? And they are saying that there are different divisions. So one of that division is a magazine division. So they are saying that the division as a whole can be considered as a investment center, because in your division you will be incurring cost, you will be earning revenues with which you will be making profit, and then that profit will be reinvested into the division. Okay, so the senior manager, that's what they are saying, that the senior manager will be having the responsibility to make the capital investment in the division. So the division as a whole can be considered as a investment center, and their performance can be calculated by the return on investment, that the investment that they are making, how much return they are getting on that. Okay, the next one that we have within the magazine division, the fashion magazine, sports magazine and the business magazine might be profit centers. Okay, the manager of each unit might be responsible for the revenue and the cost of the unit, and the performance of each unit will be measured by the profit that it makes. So whole division is an investment center, and within that division the 3 different sections that we have, for example Samsung, let's say mobile is a whole division. So that will be considered as an investment center. Now within that mobile, you know that there are different series of the mobiles that we have. One is for the elite class, for example Samsung Galaxy Note, Galaxy S5, all of those big mobile phones, the expensive ones. Then we have much more moderate ones, the average ones, and then we have the cheaper ones with less features. So these 3 would be considered as the profit centers. Same is the case over here, that within the magazine divisions, the different magazines that we have, fashion, sports and the business, they can be considered as a profit center. And definitely the further division that we have, that within the fashion magazine we have different functions, that is commissioning, editing and printing, marketing and sales, they can be considered as a cost center, because they will be incurring the cost. Okay, incurring the cost, and the magazine as a whole will be earning the revenue. So they cannot be considered as a profit center, they will be considered as a cost center. Okay, they will be considered as a cost center. Now the information, if you are working in any of these centers, definitely the whole course that we are studying over here, the main purpose of this course to study is to provide information. Okay, is to provide information to the management at the different levels so that they can work with that information and move forward. Now, when we talk about the information that is required, so different kind of information can be required. Okay, different kind of information can be required. Whenever you are providing the information, what you have to keep in your mind, first of all, the qualities of the good information. Okay, and what are the qualities of good information? That it has to be accurate, it has to be complete, cost beneficial, user targeted, it has to be relevant, it has to be authoritative, timely and easy to use. All of these qualities should be in your mind, and bearing these qualities, and the most important one is the user targeted to whom you are providing the information, and then the other qualities will synchronize automatically. For example, if you are providing the information to the top level management, it has to be summarized, it has to be presentable. But if you are talking to an operational level, a supervisor who is working in the factory, you can just go and talk to him face to face, verbal communication, because he will be needing much more detailed information, whereas the top level management will not be needing detailed. Now, when a company starts, what is the first thing that a company sets? The first thing, when a company is starting up, the first thing that the company will set up is their mission statement. Okay, the vision of the company. What is the vision? Because when you start up a project, when you start up a company, you start it up with a certain vision. You just don't start up, you just don't go get up from your bed and today I want to start a company. Okay, there's a whole vision and a whole logic and a mission behind that. So a company sets their mission statement. That mission statement is a long-term planning. Remember 3 stages of planning: strategic, tactical and operational. So that mission statement is a long-term planning, that within 5 years where you want to see your company. For example, I want my company to be number 1 in the pharmaceutical industry in Middle East. I want my company to be number 1 in the mobile industry all over the world. So you have to set up a vision. Then it is broken down into more tactical plans known as strategies. Okay, more tactical plans, that how to achieve on yearly basis, what we have to do, how much profit we have to achieve, how much market share we have to gather. And then it is broken down into more operational plans, which is like daily or weekly basis, that on daily, what is your target, what is your objective for the week, that in a week I have to prepare 100 units, in a day I have to prepare 15 units or 20 units. So that will be your operational planning. Now, so when we talk about these centers, different kind of information you can have. For example, keeping the expenditure under control, that might be relevant to the investment center, because they are the only one who will be investing. Okay, earn a sufficient amount of revenue, relevant to the profit and the revenue center, that you earn a proper amount of revenue, your target is achieved, your budget is fulfilled. Making a profit, definitely that's the ultimate goal of a company, that to earn a profit and to maximize the wealth of the shareholders, because ultimately who is the owner of the company? The owner of the company is shareholders, right? The owner of the company are the shareholders. So you want to maximize their wealth. How can you maximize their wealth? There are 2 ways. There are 2 ways through which you can increase the wealth or increase the money of the shareholders. That is, either you make profits, okay, either you make profits and give them dividends, or increase the value of the company, or you increase the price of the share by the good performance of the company. So there are 2 ways in which a shareholder can get a return. Either they sell the shares and get the premium by selling the shares, or you make the profit and give them the dividends. So there are 2 ways to do that. And make a suitable return on investment. You have to set a proper benchmark, that what is your return of investment that you are targeting, and based on that you can only move forward. Alright. Now, management accounting, basically there's a good amount of data over here, but obviously I'm not going to read that. I'll be discussing with you. This course is related to management accounting, right? I told you at the initial stages and from your carried forward studies, if you remember, what is basically management accounting. So when we study management accounting, first of all, the first thing is that it is internal to the organization. Okay, it's internal to the organization. So management accounting, what purpose does it serve in the organization? Decision making. Absolutely, decision making. It serves the purpose of the decision making. So when we talk about the decision making process within the organization, there is a complete chain of command. Okay, you cannot just take the decision on your own. There's a complete processes you have to go through and you have to follow in order to take a decision. So we looked at the three purposes, that is planning, controlling and decision making. So the first step is that you need to plan. You need to make proper plans, and then you start actually working towards those plans. Right? Start actually working towards those plans and then make a proper decision, one of decisions. So when we talk about this decision making, when you are making a plan, can you just make a plan like that? No, you need some information, you need some proper guidance on that which you can use. Now if you are making a budget, right, if you are making a budget, you would be looking at your previous year's actual result, that how much was my expenditure, how much was my revenue, how many units did I sold, now how the prices are changing. So all of these information you have. So basically we discussed about one thing, who are the management? Management are the people who are running the business, and management information is the information which is provided to the management to run the business. So management accounting, guys, is the process of providing the information to the management so that they can plan, control and take informed decision. I told you the difference between informed decision and correct decision. Correct decisions means you are taking the right decisions. Informed decision means that you are taking the decision after having some information. You are informed about it and then you are taking a decision. Now, does that mean informed decisions will always be correct? No. Informed decisions means you are informed about the things and then you are taking a decision. But that does not mean that you will be taking the correct decision all the time. Sometimes you can take wrong decisions as well. Right? So basically this is all about the management accounting that we have over here. Now, from management accounting, we have one branch of management accounting which is known as the cost accounting. Okay? One branch of management accounting is known as the cost accounting. Guys, don't ever confuse yourself with management accounting and cost accounting being the same thing. Most of the people, what they do is that they use these terms interchangeably. Okay? They use these terms interchangeably and say that the management accounting and the financial accounting is the same thing, whereas they are not. Management accounting is a broad field, of which cost account is the major part or the integral part or the important part. Right? So when we talk about cost accounting, basically cost accounting is something in which you would be costing either a product or a service or a department or a division or an organization as a whole. So whenever you are trying to formulate the cost of anything, that is known as the cost accounting. Now why it is important in the organization, or why it is a very important part of the management accounting, the reason is that because in your management accounting, most of the things that we will be talking about will be relating to the cost. For example, if you are a manufacturing company, what will be your revenue earning stream? A product that you will be manufacturing. So, right? So when you will be manufacturing that product, first of all you need to set up a cost for that. Then only you can set a selling price. And whenever I say that set a cost, it is not that easy. It is not that easy because there are a lot of things which are not directly impacting your product, and those costs has also be included into your product. For example, rent. Do you know how much of the rent is going into the product? No. So there are certain techniques that you have to apply in order to make sure you formulate a proper cost, and the cost has to be formulated for two main purposes. Okay, for two main purposes, that is for the inventory valuation and for the profit reporting. Okay, for two main purposes we need to have cost: inventory valuation and profit reporting. Inventory valuation means that you need to value your inventory, that whatever inventory you have, what is the total value of that. And the second thing is profit reporting. If you are not able to set a proper cost, can you set a proper selling price? If you are not able to set a proper cost, are you able to set a proper selling price? No. If you will not be able to set a proper selling price, can you make profit? No. So in order to make profit, first of all you have to make sure that you make a proper cost. You formulate a proper cost for your product or the service that you are providing. And there are different techniques. So basically cost accounting relates to the formulation of the cost of anything within the organization. Now the data that we will be using, the set of data that we will be using for the cost accounting, the same data can be used for the financial accounting. There's no such phenomena that you have to maintain a separate, you have to gather separate data for financial accounting and separate data for the management cost accounting. The set of data can be same, the same double entry concept we will be using, but the context of using that will be different. We will be using now in the context of the cost accounting. Okay, management control systems. Basically this will be relating to the control part of the three purposes. Management control system, what we will be doing is that basically management control system is a system to control the activities within an organization, right? To control the performance of different things in the organization. So first of all, what we will be doing, identify the objective of the organization. So I just told you that when you will be identifying the objective of the organization, there are three stages, that is long term, medium term and short term. So on the long term you will be having your mission statement and the vision of the company. Short term you will be having yearly budgets, annual budgets, and operational or the low level you will be having the day-to-day activities and the day-to-day planning. Setting quantified targets for achieving those objectives. Now you have an objective to be the number one. You have an objective to be the company to come into the top tier banding. Now to do that, what you have to do? You need to set targets that in order to be one of the top companies, my annual profit should be suppose 1 million, 2 million. So you have to achieve those targets. But guys, be very realistic when setting your targets. Okay, whenever you are setting a target, for example, you are saying that I want to do ACCA, right? And you are setting your target. I will be doing 5 papers in one attempt, or I will be doing 5 papers in 6 months. Is that possible? No, because you can only take 4 papers in one attempt. Okay, so you should be able to set a target which is realistic and possible according to the resources which are available to you. As a company, you need to assess that what resources you have and how you can achieve your targets. So you have to set targets which are quantifiable. This word quantifiable is very important, because there are certain targets which are non-quantifiable. That happens mostly with the not-for-profit organizations. Okay, the key performance indicators that we have in the not-for-profit organizations, they are not quantifiable. For example, when we talk about the hospital, you know, in a hospital you can only get the feedback, that because you cannot assess that how much care has been given to the customer or the patient. Okay, what kind of a service has been given. So that is not quantifiable. You cannot say that today I will be giving 80% care to the patient. Some of the things are not quantifiable. So it would be better if you set the targets which are quantifiable. For example, the amount of profit that I will be earning, that can be quantified. Measuring your actual with the budgeted or the planned. Why to do that? Control. Okay, control. After you have set your targets, after you have set your objective, what you need to do? You need to compare your actual with your plan. And if there is any deviation, you have to take the control action. If there is any deviation from your planned activity, if you're deviating from your plan, you have to make sure that you bring in the control activities or the corrective actions to make sure you take the proper decision. Okay? Right. Most of you would be familiar with that. That is the difference between the financial accounting and the management accounting. The first thing that I want to tell you regarding the financial and the management accounting over here is that, and you guys know that financial accounting is for the external purposes and management accounting is for the internal purposes. The data that we are using, okay, the data that we are using from which we are preparing the financial accounts or the management accounts is the same set of data. Okay, it will be the same set of data. Now let's just discuss. Okay, financial accounts are prepared for the external individual. Who are the external individuals? The general public. Okay, the external individuals are the general public, who would be, for example, if you go to the website of any of the multinational company or a listed company, let's take an example of Unilever. So if you go to the website of Unilever, all the companies have already published their annual accounts on their website, so you can easily access them. There are no restrictions. Anyone in the world can access the financial accounts of any of the listed company. No restriction, because they are published for the external individuals. But when we talk about the management accounts, they are for the internal use. Budgets, variance reports, okay, forecast, sales forecast, anything that is related to management accounts will be within the organization, and it is very rare that you will be finding that information on a public forum or open for the general public. Then financial accounts show performance for a defined period and aid management in recording, planning and controlling activities, that is the management accounts. When we talk about the financial accounts, guys, are we looking at the future in that? No, we are only looking at the historic data, what has happened in the previous year, and based on that they are showing what the performance of the company at a particular period, that okay, this is the performance of the company after analyzing the previous year. Whereas in the management account we will be talking about the historic as well as the future data, that okay, this was the performance in the previous year, what can be done to improve the performance in the coming year. So we will be doing what? We will be making the plans, we will be making the budgets, the forecast. All of these things will be related to the future. Okay, all of these things will be related to the future. Okay, financial accounts, basically financial accounts, there is a legal requirement to prepare the financial accounts for limited company. Why there is a legal requirement? I have explained this point to you guys already. Why there is a legal requirement for the financial accounts to be prepared? Why do we need financial accounts? If you are a listed company in the stock exchange, so in that listed company, who is investing in your business? If there's a listed company and your shares are open for the public, so definitely public is investing in your company, right? So when the public is investing in your company, and you know that according to the agency relationship, the shareholders are the owner of the business. So if you are owner of any of the business, don't you want to see the performance of the company? So by that virtue, there is a legal requirement for the financial accounts to be prepared. Okay, there is a legal requirement. But when we talk about the management accounts, are they published in the public? No. So will there be any legal requirement for the management accounts to be prepared? No. So that is for the management account, that there is no legal requirement. If you prepare, which most of the companies prepare definitely, because they need to plan within the organization itself, there is nothing like they don't prepare. They prepare, but they are not published. But for the financial accountants, for financial accounts, there are a legal requirement. Format. When we talk about the financial accounts, you guys have been going through the financial papers. So if you see the balance sheet, if you see the income statement, if you see the cash flow statement, all of these will be in a same format. Okay, all of these will be in a same format. So even if you go on the internet and search out for the balance sheet of any of the company which are following the certain rules, you can find the balance sheet, income statement and cash flow statement will be in the same format. Why is that? Because there is a requirement by law that these accounts should be in the same format. Any reason for that, which I have already explained to you? Why do we need a same format? Because as a general public, when you will be comparing the two companies, where to invest, you will be having a comparison of two companies, and if the format is not the same, will you be able to compare the performances? No. So for the sake of comparison and for the sake of potential investors to assess whether to invest or not, the format of each of the items present in the financial accounts has to be same. But in the management account, the format is at the discretion of management. The discretion means the choice of the management. They can have any format. For the budgeting, they can have any format. For the forecasting, they can have any formats. So any format is used by the management accounts for the internal purpose of the organization. Okay, financial accounts covers business as a whole, whereas management accounts focus on the specific areas of the organization. When you talk about financial accounting, financial account would be looking at a business as a whole. What are the assets? What are the liabilities? How much equity do we have? What was the income? What was the revenues? What were the expenses? Everything would be there. How much cash do we have? What are the movement in the cash? But when we talk about management accounts, they will be looking at a specific area. For example, they will be looking at budgeting, how to increase the profits. They will not be looking at the capital expenditure. Okay, then they are looking at the capital expenditure budget. So they will not be looking at the revenue. So they will be specified at a particular area. Financial accounting information is monetary mostly. Management accounting incorporate non-monetary measures. What is the difference between monetary and non-monetary? Or you can say financial and non-financial data. Financial account would be having financial data, means numbers which can be quantified. But management account will also be having the non-financial data. For example, the satisfaction of the employees within the company. Can you quantify that? No. The health and safety rules of the employees within the company. Can you quantify that? No. And as I told you already, financial accounts will be showing you the historic picture of the organization, whereas the management accounts will also be looking at the historic as well as the future picture of the organization. Right? So that's it from this chapter. And now we finish our chapter number 1. Now I will be giving you some handouts of the questions. So solve them with whatever information that you have retained in your mind with the lecture that we have discussed. Okay, so the first question from the handout that we have, the first question is, information is processed data, true or false? Obviously that is true. So the first answer would be true. Which of the following statement is correct? Management accountant are responsible for planning, decision making and control. The purpose of cost accounting system is to collect information about cost. A management accounting system provides all the strategic tactical information required by the management. Management accounting information should be timely and relevant, but does not needs to be 100% accurate. Okay, which one is correct? Everyone has done A. So A would be the correct answer, that management accounting is responsible for planning, decision making and control. A company owns a factory that produces component X. All units of component X are transferred to the company's processing center where a final product is assembled. Decision about purchasing equipment for the factory are made at the head office. In the company's cost and management accounting system, the factory is likely to be treated as cost center, revenue center, profit center or investment center. Investment center. The correct answer is A, cost center. The reason is, look guys, it says that factory is producing the component. Okay, factory is producing the component, but for the sales of the component, for the revenue of the component, it is being transferred to the processing center. It means that the factory does not have the control, or it is not falling under the responsibility of the factory manager. The revenue is not falling under the factory manager. And if they want to purchase any equipment, who is purchasing? The factory or the head office? The head office is purchasing for the factory. It means the purchasing or the investments in the assets is not also under the factory manager. So neither the investments is under his control nor the revenue. So he is only responsible for the cost. So this will be a cost center. Okay, a cost center manager needs regular information about cost incurred by the center. In the cost and management accounting system, which of the following is the most likely frequency of the regular cost reports for the center? Daily, weekly, monthly or annual? Weekly. The correct answer is C, monthly, because when you talk about the cost, different costs that are being incurred in the organization. Let's take an example of a rent. Rent is paid on the monthly basis. Let's take an example of salaries. Most of the salaries are paid at the monthly basis. Let's take example of utility bills. So utility bills are also paid on the monthly basis. So it would be better to have a monthly report rather than having a daily, weekly or the annual. We can have budgets which are based on the annual reports, but the regular reports can be based on the monthly basis. Okay, right. Question number 5. A profit center manager needs information about which of the following? Cost incurred, revenue earned, capital investment. B would be the correct answer. That is 1 and 2 only. Cost incurred by the center and revenue earned by the center. Okay. Question number 6. A company is preparing a budget for the advertising campaign that the sales director has just ordered, subject to the approval of the cost. The campaign is expected to last for just over 6 months. The advertising budget is an example of strategic planning, tactical planning or operational planning. Definitely it will be tactical planning, which is the medium term planning ranging from 6 months to the 1 year. Okay, so this is it from chapter number 1, and inshallah in our next class we will be talking about the chapter number 2. Okay, so that's it from today's class.